Hello, everyone. Welcome to episode 3 of All Up in Your Business. I am Aiden Kramer with the law office of Aiden H. Kramer in Colorado. In this episode, I'm going to talk about S corporations. Um, if you're a business owner or a potential business owner, and if you've spoken with CPA, there's a possibility that your CPA or tax person has introduced the idea of electing to be an S corporation. And while a lot of people have heard of S corporations and may even be treated as an S corporation, I've spoken with a lot of business people who don't really understand exactly what that means and how it affects their business. So in this episode, I'm hoping to explain it in a bit simpler terms so business owners can understand what the heck it means. So when you're forming a business, as I discussed in episode 1, you would choose a business entity. Two of those business entities are corporations and LLCs. Now, some people say that there are two types of corporations, a C corporation and an S corporation, and that's not really the right way to say that. There's a corporation can elect to be an S corporation, and whether you're a C corporation or an S corporation is strictly a federal tax issue. It doesn't really affect what type of an entity you are in the eyes of the state or how your business is run really on a day-to-day basis. So whether you're a C corporation or an S corporation is strictly related to federal taxes. So if you form a corporation, the corporation defaults to be a C corporation. C and S corporation, the name comes from the subchapters of the federal tax code. Subchapter S is where the guidelines for an S corporation comes from, so that's why they're named C and S corporations. So if you're a C corporation, which is the default, what happens with the taxes is money comes into the business and it gets taxed at the corporate level. A corporation is a completely separate taxable entity that has to pay its own taxes. So when the company makes money, it has to pay taxes on that money. And then the money is distributed to the shareholders, and then the shareholders have to pay taxes on it as well. So what that's called is double taxation. So C corporations experience double taxation. The money comes in and it's taxed twice, as opposed to an LLC, where the LLC is a pass-through entity and the money comes in and it's taxed only once at the individual level of the business owners. So the LLC is not its own separate taxable entity. The money is taxed strictly to the business owners. So what happens when you elect to become to be treated as an S corporation? The S corporation gets to avoid that double taxation. Let's see, a corporation can elect to be an S corporation by filling out IRS Form 2553, in case anyone was wondering. But so the income and the losses to the corporation are taxed at the individual level of the shareholders. So the corporation's not paying that tax and then the shareholders are paying it. It's going straight through to the shareholders. And they can also deduct the losses from their personal taxes as well. So you may be thinking, well, that sounds great. Why wouldn't every corporation just become an S corporation and avoid that double taxation? Well, it's not that easy. The IRS gives strict guidelines for what types of corporations are eligible to be treated as S corporations. They are, let's see, the corporation must be a domestic corporation, so it can't be a foreign corporation of another country. The shareholders have to all be either individuals or estates or trusts. I'm not going to get into that very much, but partnerships and corporations can be shareholders of corporations. But with an S corporation, none of the shareholders can be partnerships or corporations. So I hope that wasn't too confusing. Just um, remember that an S corporation can't have another corporation or another partnership as a shareholder. There have to be 100 or fewer shareholders and only one class of stock. And there are a few types of businesses that aren't eligible to be S corporations, some types of insurance companies and financial institutions. So if you're one of those, you may want to look more into it if you're eligible. Um, but generally, if you meet those eligibility requirements, then electing to be taxed as an S corporation can save the company a lot of money in taxes. So also, an LLC can elect to be taxed as an S corporation. As I mentioned, typically an LLC only pays taxes once. Well, the individuals pay the taxes basically, and the money, income, and the losses is already passed through to the shareholders or to the owners of the LLC. But what happens when you're an owner of an LLC or any other business, you have to pay self-employment taxes. When you're an employee of a business, you get paid and some taxes are taken out, but you don't have to pay any self-employment taxes. But when you're actually the owner of the business, you have to pay those self-employment taxes, which are, they go to Social Security and Medicare, I believe. So the owners of the business have to pay that self-employment tax. But when you elect to be treated as an S corporation, as an LLC, the business owners get to take wages as employees from the company. So they pay income taxes on that money that they get paid as employees, but they don't have to pay that self-employment tax because they're being paid as employees. And then any additional income that comes in is taxed as dividends. So electing to be treated as an S corporation is a way to avoid paying that self-employment tax. Now, it would seem plausible then to say, well, I just won't pay myself any wages. I'll just take everything as dividends. I won't have to pay any income taxes. It'll all just be taxed as dividends. But the IRS says that businesses that are taxed, or LLCs that are taxed as S corporations, the employees, the owner employees, have to take reasonable wages. So you can't just not pay yourself anything and avoid paying that tax altogether. You have to do a little bit of research and find out what someone in your position in your geographic area would make, and you have to pay that to yourself as an employee of the business. And then the additional income is dividends. So, it is a way to save a bit by not having to pay that self-employment tax. So that's just a pretty basic explanation of what it means to elect to be treated as an S corporation. There are a lot of other things to consider that I'm not going to get fully into. But if you are starting a business and you think maybe that's the right way to go, or your business is growing, you definitely need to talk with a good tax person, a good CPA or tax attorney, to find out if that's the right move for your business. And if it is, then that's great because you're saving a lot of money in taxes. So if anyone has any questions about that or anything else, feel free to ask and I'll try my best to answer them. I'm not a tax expert. I took one tax class in law school and I did a little bit of research outside of that. So I know some stuff, but I'm certainly no tax expert. But I'll try to answer any questions that I do get. And as always, if anybody has any other questions or if there are any topics that you would like me to cover or discuss in more depth, please let me know. And if you are in Colorado and want to speak with me personally about any business issues or estate planning, feel free to contact me. I'll put my information at the bottom of this video right now. And thank you very much for watching. I look forward to seeing you next time.